It's down, so I'm on my cell data. So hopefully it's not so laggy for you guys. Hopefully the cell phone company can deliver us some good quality Wi-Fi or LTE tonight. Okay, so talking about failure today. Sorry I'm a few minutes late. I was just correcting some failure, actually, as we were speaking. I was dealing with a situation at our motel where we kept this bad property manager on, and the failure was we should have fired them right immediately, and this whole situation ended up happening from bad management, bad choices. And sometimes if you're not, micromanaging your business, it can fail so quickly. So that's been a big learning outcome for me. Just dealing with all this, and it's been a lot of time, a lot of effort, and a lot of energy. And I want to talk today about failure. I think today's episode is going to be about all the failures I've had in my life. And recently I've gone through a really bad, connection of failures in many sectors and many issues in my life. For one, I've been having some health problems, at least in part caused by some of the bad decisions that I've made. And one of those was another really bad one that's like financially, I guess this is the largest one, is my stock trading, my options trading, right? I applied leverage to my account and I blew it up. I've been shorting the market for the last year and a half. I was long the market in October 2023, and I longed it for a minute in August and again in April, but every other month. So I was long for 3 months of the year. I was short for 9 months of the year. I only ever went long when things were way, way oversold, like there was depression in the market. As soon as things went euphoric again, began shorting. That was a mistake. I learned that fundamentals and macro analysis are useful in building businesses and making good forecasting, but they're not useful in predicting stock movements. In fact, the irrationality of the stock market, and for instance, technical analysis around momentum. Momentum seems to be more important than the underlying of these companies. Some of these companies are so debt-ridden that they would be bankrupt in 2 years, and yet people are jumping their stocks up 100, 200% in what is called a short squeeze. And it was wild to me to realize that when you're trying to make an investment, you can't think about the short term. And with shorting, you've got to be very, very, very careful. You definitely don't apply leverage. And I got into an issue where I didn't start with leverage, but my position got so destroyed and so beat up that I had to apply leverage. And then it got worse, so I had to apply more leverage to try to fix the situation, which is not how you fix the situation. The truth is, the lesson that I've been preaching on here for like 9 years is you don't try to stock trade. You don't try to pick individual names. You don't try to believe that you can beat the market. There are areas that you can get extraordinary returns, way above market S&P 500 level returns, and that is in places like business ownership. And real estate is a segment I like in business ownership because the underlying of the business is a solid piece of land. It is a solid building that many people want, that is desirable. It is, my favorite thing about real estate, I think, is that it sells itself. There's a shortage of housing, and so it's really easy to sell that product. It's really easy your customer comes to you. Your customer comes to you and they pay, and you provide a service, which is providing them a place to live. So your product is a very much fixed asset based, but there are some great tax advantages that come along with that. And like you buy a service-based business, and I buy a business of equal size to a motel, and it's going to have 10 staff. At any minute, the COO and the main staff could leave. If I buy this business and the staff leave, or a competitor comes in and innovates, and my product is no longer, or service is no longer valuable, that company goes to zero real quick. But with a building, even if my manager, in this recent case, our manager completely destroyed us, made a bunch of bad decisions, even put in squatters, taking no first month's rent, no last month's just security deposit, no payment at all. It's like, hey, come on in, stay here for free. I don't promise you pay, pinky swear. By the way, there's $5,000 in furniture in the unit. Don't break the TVs, and just promise you'll pay. And then turns out there's squatters' rights, actually, even in motels. So I learned the hard lesson of being very careful. We also had stolen, rooms were rented and funds were given to the manager. The manager didn't provide those to us. So completely just stole all the money. Again, this should be a criminal case. It actually should be a civil case as well. We should sue. I'm not a litigious person. It's just not in my nature, but maybe I should be more litigious, and maybe I should be more. There's been several times in my career where, like, I partner with a realtor from Toronto, and she, I don't trash talk people. It's not. I'm not gonna call out names. It's not who I am, what I do. But like, I just walked away from. Well, I'm still at least angry about it, and I think that the payment should be made for my efforts, acquisition fees and management of renovations, et cetera, so forth. And anyway, but there have been lots of examples where I should have litigated in my time, and that's maybe a failure. Is like being the nice guy I've learned in business. People are sharks in the business world, like, especially in the elite levels of business and entrepreneurship. I find that it draws narcissists and psychopaths, and just in general, people that are very driven, self-interested folks get drawn into that business. Not everyone. There's lots of really good people like business too, but lots of really not so great people that have kind of, that have kind of crept up in the woodwork. And I realized that maybe it's a quarter of people that leave a really bad taste in your mouth because it happens, 10 or 20% of the time, but that 10 or 20% of the time is so acute and painful that it is overrepresented in your mind and in your memory. And I think that's at least a piece of it for me anyway. It really is one of those things where you just make the best decision you can with the information that you have. And that's, at the time it was like, what is my energy worth? And I don't like to litigate because I value my time at $1,000 to $5,000 an hour. And so if I go and squabble with a squatter and spend hours on the phone, that costs me thousands of dollars. Their time might be worthless. And, this comes back to, my philosophy classes in university, right? About like, what is someone worth? But like, forget that. In this economic system we work in, I'm running a business here. It's not about whether I like the person. In fact, often my personal viewpoints, I grew up with nothing. And so a lot of the time I actually want to work with people and find solutions. And like, because I grew up with so much pain, my ability to endure pain is probably really high and way higher than it should be. I probably take a lot more shit than I should. In some ways, that's a good thing. In other ways, like, let's look at trade, for example. I've been punished for a year, and the logical person closes down their account. But I didn't give up. I just keep taking poundings every fucking day. I had days where I lost $100,000 every day, all week. 100,000 gone, 100,000 gone, 100,000 gone. It's like I was at the casino, it felt like, as my stock portfolio just eviscerated with leverage. And I've gone through days like that, and weeks like that even, cycles where my ability to endure pain is sometimes a bad thing. Now in business, that grit is such a superpower because I just don't give up. And so that's a learning outcome, is like knowing myself and knowing I have to put my assets into things that I can lean in and control and micromanage. When I micromanage my stock trades, it makes it worse sometimes. You get into ego, you get into these mentalities where you're tilted, and that's a mistake. It can happen in business too, where you let your emotion cloud your logical decision making. I might be really angry, going back to a squatter example. I might be really angry if a squatter, smashed my window or punched my TV. In this case, they actually just punched a 65-inch TV. If they did that, that's something that would make me emotionally very supercharged. But the business person in me needs to be like, okay, what is the best way to solve this issue without getting emotional? The emotional person in me might be like, hey, I have landlord rights, and grab like 20 snakes and throw them in the unit and store them in the unit, but I didn't have any cages. Sorry. That's a right, actually. I can go in and remove my furniture from a unit. There's lots of things you can do as a landlord, but like that gets pretty petty, and like there are, obviously human rights risks, I guess. I don't know. But there are lots of things that I've seen online, I've seen people do to solve types of situations. And anyway, I don't want to focus on that one example. I want today to just talk about like business failures and where you can learn from them, where I've failed. I've been extremely upset with myself I've lost millions of dollars recently. I made a couple $1 million in bad decisions, which means that I now get to work in my business for free to make up for all the mistakes that I've had. And that's a mental mindfuck, is like, hey, I just got a prison sentence of 6,000 hours of community service where I now have to work in this business doing shit I don't like to make back the money that I lost from bad business decisions, one being the stock options trading, primarily. I also have some bad debts. In 2021 and 2022, sent out a bunch of mortgage loans to folks. And I'm not going to call people out because, again, not how I roll. And they're big names, people you'll know. Hopefully they make it through this. I don't want to throw them on the bus quite yet, but there's 6 individuals, and 4 of them are at least 4 months behind, some 6 months or more behind. And it's at the point where, again, like we were in a bull market. And these properties, if you lend 80% loan to value on a property, and we go through a recession like we've had where property values fall 25, 30%, and then that person doesn't pay any interest for like a year, and they're in a liquidity crisis, and they have interesting things I didn't know. I'll share these learnings with you. So one, if you're in a first mortgage position and a borrower doesn't pay their contractor, the contractor can actually, and if it's a sizable enough amount, they can get a contracting lien. Say it's like, in this case, $50,000. They can get a lien that supersedes your first mortgage on the property. They get paid out first. Also, I had no idea, the lawyer gets paid out before you. And sometimes these people who are in a bunch of debt, they might have their law cases going on. They may take a $10,000 retainer right off the sale of the purchase price before the first mortgage is paid. And then I found out realtors get paid before the first mortgage gets paid. The bank gets paid after the realtors and the lawyers and the service contractors are all paid. Oh, and the CRA, guess what? This person didn't do their taxes for 2 years. Now they have $200,000 to the CRA. CRA is going to seize that property before the first mortgage holder. So you lend 80% loan to value to a bum. I didn't realize that. I thought the property mattered more than the person. The person matters so much more. Your due diligence on that borrower is so important. So important that, I didn't realize that if they don't do their taxes, let's say you loan them and a year later they decide not to do their taxes. They had a really great year. They spent all the money that they should have paid to the government when they sold some properties or whatever. And now we're in a recession. And now the cash flow stopped. Interest rates are way high. And all these real estate guys have no cash flow coming in. They're losing money every month. And so they start borrowing from every source they can. They stop paying their debts. I didn't realize all these things could come before the first mortgage holder. And if you're a second mortgage holder, the first mortgage holder in front of you is going to nail with so many fees that it's like, after all that, the second mortgage holder is not going to get much, if anything. So that was a learning outcome. Never lend ever unless it's secured in first position with a safe loan to value. Unless, I'll break that rule for family. I'll break that rule for close friends. I might, if it's a reasonable amount of money, I'll break that rule if they have a really good track record, if I can verify, net worth and things like that, and get a really tight handle on the financial picture. But anyway, I underwrote some loans that were not amazing. They were amazing at the time. I got great rates, and any loans I'm doing now in 2023 are fantastic. We've improved our processes, but I still have lagging effects of decisions I made in 2021, 2022, where I didn't expect a 35% pullback. And on top of that, some of these developers didn't, not only did we get 35% pullback, but their interest rate went from 2% to 8% on a lot of their loans. That's a 400% increase. So and then not only that, they can't even sell their properties because there's no liquidity in real estate. Real estate takes a long time to sell a property. So you go from no liquidity to bankrupt real quick. And so that's a big learning outcome and a failure. And so I will have to, if I want to get back to where I was, which again, do I need to get back to where I was? Debatable. I'm a few $1 million poorer than I was at my very peak. I still have plenty and I'm doing fine. I don't need to get a job or something, but in my brain, justifying making back those losses. And maybe this would have happened to me at a higher, imagine if I had 150 million or 250 million. And just imagine I was 20 years from now, because I'm on a really good track. And I went through this recession that I've gone through now, but at a bigger amount. Because next recession, I'm going to be way more prepared than this one. This is my first real estate recession. I mean, I didn't start investing in real estate until 2012. So I've been in the game for 12 years. I've been doing fix and flips and stuff like that for 12 years. But our last recession was in Canada in the 90s. I mean, we had a little blip in 2008, but Canada was largely not affected. So we haven't had a recession really in 3-4 decades. And my mindset wasn't, to be honest, I didn't think the government would let things get this bad. I thought that, in Canada, our GDP is really not doing well. Unemployment's a problem. Inflation's actually still fairly bad. We've been making good progress. The last report was the first one. We've had a really good report. So I'm hoping they're going to drop rates. I think we're getting close to Canada dropping rates. But if they do before the US, that's a whole other currency challenge, an export-import challenge that gets created. So I think Canada's kind of tied to what the US is doing. But we really need to cut in Canada. It's bad. And the US also, not as badly needs to cut, but also should cut rates. The problem is if they do, we may get a resurgence. We just saw 2 bad inflation reports in a row, and now gas prices are spiking. So we're going to have another bad inflation report when April's data comes out, or when March's data comes out in April, and April's data comes out in May. I think we're going to see some more bad reports. And it may be, that they need to keep things higher for longer to fix that. They may, under the pressure of Biden and his crew wanting to win the election, he continues to create massive deficit spending, right? $1.2 trillion spending bill just got passed. That's a lot of money to pump into the world, or into the U.S. economy. And so that inflates assets. And that ultimately leads to more inflation. So the challenge is like, on one hand, it sounds like we have a Fed who's committed to fighting inflation, but has now been like, we had it on a specific target at a specific date, but like, that's flexible. And like, it can take a little longer to get inflation under control. And it can be a little bit higher. If inflation is 20, 30% higher than our target rate, 40% higher, and it takes an extra year, no big deal. It's okay. It's basically what he said at the last meeting, which is like the most bullish thing I've ever heard in the face of like a bunch of really recent bad data. So that was a surprise. I actually didn't expect Jerome to roll over and basically placate to the Democrats. I didn't expect that. But again, he was elected by, and probably will be kicked out if and when Republicans take office. Rocky says, hey, Mike, you can never fail too much. Have you ever been audited for rental expenses? Can you please share your experience or tips to avoid audits? So I'm not a tax expert by any means. I have had reviews before and minor audits and stuff like that. And like typically you just have to, provide an explanation of what happened. So in our case, it was a bug flying around this pot light right above me. Maybe I'll move a little bit. Can you still see me? Yeah, so I mean, there's always challenges, and it's going to happen at some point. You're going to get audited at some point, and it really comes down to like making sure you keep really good records. I've been bad at this. I'm getting better at it. My records from 10 years ago, I had a bunch in the attic of a place, and I stored all my records up there, forgot they were up there, moved out of the house, forgot they were in the attic, still I owned the property, rented it out. And the tenant in there took them, found her social insurance number, and actually applied for credit online for payday money loan. Using our SIN numbers on our old tax returns, and then shredded all of my tax documents from like 2012 to like 2015 or something. So I lost all my records. Hope I don't get audited from 10 years ago. I don't know how, they only go back for 7 years, I think, but that was really unlucky. Better to digitize your records. It's something I would like to work towards. But again, I see tax and accounting as like a laggard or like a cost center in my business. I'm focused on trying to drive revenue. I'm focused on trying to build a business. And like digitizing records, not important to growing the business. Like a lot of people focus on the minutia. Like I know people that won't start a company, they're like, oh, I have to go start a business and get a corporation license and do this and do that. And they just procrastinate from actually going and selling. Like go book 10 jobs. Go sell $50,000 of product. Go and do the thing. Stop planning it. Take action. I can go put some ads out and go sell some stuff. And then worry about, then you got to worry about how you account for it. Like what kind of corporate structure or tax structure is that. Just go out there and do some shit. And then when you're doing a lot of shit, then you worry about how you account for that. Pay a little extra tax, whatever. Optimize once it becomes an issue. I think a lot of people get clouded with that, and it's a flaw, I think, that a lot of people have. They spend so long like thinking of a corporate name and like thinking about how to open the corporation. It's like you can make a sole proprietorship under your personal name that requires no filing at all. A tax time, just declare it as you're a sole proprietor. It's like the easiest thing ever. You don't even need a corporation to get started. Go and do that thing. Go chase that idea. This episode's about failure. Go and fail. Go and fail. Going and failing is so much better than doing nothing at all. Please go out there and fail. I'm so glad that I've lost millions of dollars early lending practices and stock, mostly in stocks, but in bad stock decisions, because that taught me and reaffirmed things that I already knew, but I had to, I guess, figure out for myself. I had to figure out for myself that ego's a dangerous thing, that sometimes you get an emotional tilts that, you get driven into places that are dark and you make bad decisions sometimes. So for myself, it's just not even trading anymore. I've just, like, no matter how sexy DWAC is, Donald Trump's new, or Reddit, or as sexy as those insane valuations get, and as they could probably squeeze to a insane valuation that doesn't even make sense, and I might be tempted to short them. I just have to make a rule like hard stop, can't do it. Even if the thesis is good, even if it's data supported, you're still rolling the dice. There's a probability there. And I'd rather take on 99% win rates. I'd rather be like real estate, where I can hold the asset, and over 10 years, I always win. You just always win because inflation carries you higher. You have cash flow. Even if the property doesn't appreciate at all, you still get the cash flow, right? So I like businesses. It's just my preference. All right, next question was, do you have any guidelines for margins for BRRRR strategy? ARV times percentage of cost plus rental. lately the spread just feels really narrow. I mean, we're looking at something. The spread is narrow right now. Admittedly, it's a hard time. Like, this is the bottom. Well, maybe not the bottom yet, but we're close to it for real estate, especially in Ontario. And things are going to turn. I don't know how long it's going to take, but most of the pain is in. Most of the pain has been felt. Not all of it, but we're getting close. And so as these folks unload, there'll be deals to be had. So it's a real opportunity to take these properties on, knowing that prime might be 7.5 right now, or your line of credit might be 7.8, like prime plus a half, but that it will come down to 4 in the next couple of years, knowing that there's all that juicy upside. And so maybe the numbers don't work that well right now, but if you can hold this property and it's still slightly cash flow positive, or at least neutral, and you've really run your numbers to be sure you're actually neutral, not didn't account for vacancy, I didn't account for maintenance, I didn't account for, you know what I mean? Like, a lot of people will play with their numbers to be like, oh, this deal works, but like, does it actually work? But yes, in general, I would agree with your comment. It's a hard time to make a profit. Margins are tight. If you're not a good operator and you don't lean in as an operator on your business and as an owner into your business, your staff won't be able to run it efficiently. They just don't. People don't, for one, like, they work for you, not for themselves, for a reason, right? They don't have the same mindset you do. In a lot of cases, their incentives aren't aligned. They may be getting a salary, or they may be getting a percentage of commission. But like, even a manager that's on, for your properties, is on a percentage of revenue. It's a better way because they're incentivized for every, when it's rented, they get paid. But they don't have a loss. So if it sits empty for 3 months, what do they lose? You might lose $5,000 a month, might lose 15 grand. You might lose everything, your whole profit for the whole year, but they lose nothing. And downside risk is a good motivator. Carrot and stick are really great motivators. And I think it's something you have to remember. Like, I think some people don't. It's just like, they just assume. In the early days, I made that failure. I used to assume that people have the same interests I did. When I worked as a salaried employee, I was worried about my company's bottom line. I wanted to drive profit more than I cost them. I wanted to drive for them increased profit above and beyond other staff members I was competing against. I was competitive in that way. That's why I was promoted every year that I worked. I went from analyst to senior analyst to manager of a small team. Every year I was promoted. Within 3 years, I was already a manager. And that was right out of Ivy, right? Out of school. And that mindset, a lot of people don't have. So when you're running your business, your property manager doesn't care. They just don't. They don't want to answer the phone at 2 a.m. They don't care if the water bill, if the thing runs till the morning and things flood. There's no downside for them, right? Whereas like, you as an owner will make sure that problem is solved at 2 a.m. If the call comes in and there's a flood, you'll make sure water's shut off because you're paying for the water, in that example I just made up. But those types of things as an owner are failures, I think, that you learn from. They're learning outcomes. And that's what it's all about in this channel, is just teaching you guys what isn't working and how you can learn from that. But yeah, to talk about like a formula, Randy, the last part of your question, or I guess the original first part of your question, I like to look for deals where it's 65% of ARV. So if the property is worth $1 million, I want to buy it at 650. Now that depends again on a reno. A typical reno is 10 to 15% of the price, and then a typical carry cost is 5 to 10%. So you add those two together, you get 65 plus 20 to 25. You're looking at like about a 10% profit margin. So on a 650 buy, $1 million exit, you're looking at maybe 100,000 in profit, maybe. Now the problem is, things happen, markets fall. So if your project takes too long, contractors delay, whatever else, you could end up in a situation where it's not $1 million ARV anymore. The market's fallen, and now it's worth 900, and now your profit margin is 0. People think flipping has this massive margin because they hear people, I bought it for 650, I sold it for $1 million, and it's like in a bull market, they might even get 1.1. While they're renovating it, they might get appreciation. And so it's like, they see online these numbers and they get fear of missing out. They're like, oh, the person bought it, their area was $1 million, but they actually got 1.1 when they sold it. They bought it for 650. They see 650 to almost 1.2. It's almost a double. And so in their mind, they're like, wow, the person made 500 grand. But like, did they really? I mean, they had realtor costs, they had closing costs, they had financing costs, they had renovation costs, materials, etc., utilities, property taxes, insurance, etc., so forth. Those costs add up and they can be substantial. So making sure you have margin, super, super important. A lot of people are not running their numbers right. I've seen a lot of people too underestimating their budgets lately in a big way. I've been guilty of this too, failure. I had a flip a couple years ago where we estimated the rent would be 75 grand. And we got into the walls and we found mold and we had a leak in the roof. And the roof was newer. It was like a 3-year-old roof. We were not budgeting for a new roof. That was like a big expense. a lot of things we had to fix in the property. And it's like, and it took way longer. The contractor took twice as long as we thought they were going to take. So instead of a 4-month rental, it became like a year. There's permits and issues. And permits are the worst. Any flip you do with the city involved, where there's structural permits, you're going to lose money. The city is designed to help you lose money. They don't give a shit whether or not, they just do not care whether or not you you make a profit. And they want it to take longer because they want things done their way. And so that was a learning outcome for me in a big way. So that would be a rough numbers I would work with. But again, like if you have capital to deploy and you just want to keep doing deals to keep your team busy, sometimes I'll do low margin flips, and that's okay too. I try to look for mostly juicy ones. I prefer to do like 10 juicy deals than 100 less juicy deals. I'd much rather do 5 really juicy, profitable deals than do like 20. See these guys doing crazy volume, but their margin is super, super thin. And the more you outsource in your business, the thinner the margin gets, especially in real estate. And it's a challenge with real estate. There's low risk, I think, with real estate. It's hard. If you buy a really strong cash flowing property, it's hard to lose money in real estate. Lose a lot of money, I guess, unless you apply a lot of leverage. But in comparison to like a business investment where your underlying value of your company is your staff that could leave in a second. Grander says, hey, Mike, hope you're well. How do you scale the 5-10 properties in this environment? Again, it's a challenge. You're just going to have to buy stuff that makes sense. You might have to change markets. You might have to go to a smaller market where things make sense. You might have to, change your strategy and use Airbnb or do student rentals or do by the room rentals or furnished rentals. There's certain strategies you might have to try that are more effort to get solid cash flow. But really the idea comes down to like buy properties that are undervalued and then put effort into those properties to turn the value around, fix the problems of the property, and then go and refinance the property and go on to the next one. It's a tax-free way to go from 1 to 2, and then 2 to 4, then 4 to 8, and then 8 to 16. That was what I did before I quit my job. And it really just comes down to really knowing your numbers and working your ass off, and you will get the values unlocked on the properties. It's harder now, but when I started in 2012, rates were like 4%, I think, on my mortgage. They're now like, you can get a mortgage in Canada for like 5.99. So 4%, 4.29, 5.99, we're like 1.5% off from where I started. It's not crazy. Relative to like where we were in 2021, early 2022, okay, fine. It's substantial. But compared to where I started in 2012, London also had no appreciation. From 2012 to 2016, in that 4-year period, my properties, one of the properties I bought in 2012, I sold in 2015. We did a huge renovation on it, and I sold it for the same price with my cost of renovation included as what I bought it for 3 years later. Houses on the street changed 0 in value. They were still selling 3 years later for the exact same price in London, Ontario, Canada, as what I bought them at. So I started in a flat market, relying only on cash flow. And that was really a great way to start, I think, in a lot of ways, because investors that started in 2016 in London, they got that crazy appreciation wave that was from 2016 to 2022. They didn't get to learn the hard knocks of how to invest in a bear market. Or it wasn't really a bear market, it was a flat market. But investing in a flat market teaches you, like, you can't rely on appreciation. You can't rely on the fact that the property will sell like that. Sometimes it's going to sit for 4 months in a slow market like we're in now. Things don't sell as fast. Things don't, one of the good things about the crazy inflation is that rents are sky high. So we do have good rent. Rents are skyrocketing. That's a good thing. Bum, bum. Johnny Bahama, how you doing? Thank you for leaving a comment. Harriet says, can you use some tips and info on making lowball offers in MLS listings and how to get them accepted? It comes down to appealing to the buyer. And sometimes that means a cover letter. Sometimes that means, I think in a lot of cases for me, it comes in as like start at one price, have a condition, and then beat them down. That's worked really well in this market. So I would recommend that strategy if you've been having trouble getting your offers accepted. If you're going to come in really low from the get-go, make sure it's a cash offer. Don't have financing and inspection conditions and expect them to just take it. Usually I'll get in there with a condition. I'll do an inspection. I always find shit wrong with every house because every house has problems. And then use that as leverage to get the price down further. That's a great way to get in there. And that's how you see those prices where like it's listed at 100K and you get the person who got it for 75. They didn't start at 75. Most of the time they got in at 90 and they whittled them down to 75 to get 75 cents on the dollar from the list price. Now, list price isn't always accurate either. Sometimes properties are listed way over what they should be worth. And in those situations, I mean, it could be half of list price if it's way listed high. List price doesn't necessarily determine what it's worth. We just bought a 24 unit in Sarnia. It was listed at 2.45 million. And people weren't taking it down. We got it for 1.7 something, which is like, 35%, a third of the value off ask price for a 24 unit multifamily building. And I got 3% seller financing. So you never know what you'll be able to find if you get into negotiating. So just get out there and throw out offers and have conversations, and you'll waste a lot of time, no doubt. It's a time intensive, that's the job of the negotiator, is to find those deals, is to spend the time. And most realtors don't want to waste the time, but you as the investor have to spend that time. David says thoughts on Bitcoin. I am a Bitcoin holder. I think it's grown too fast, too soon. That said, it could go much higher. There's a lot of risk here. Like if you buy Bitcoin at 98,000 Canadian or whatever, 95,000 Canadian, whatever it is today, almost 100,000 Canadian per token, over 70,000 USD a token. It could be in the next year we see half that price. So if you're okay putting $500,000 into Bitcoin, knowing it'll be worth 250,000 liquidation price, like the market value price, in the next year, possibly, then okay. Don't put a lot if you can't handle that risk. For me, I put a very small percentage because I can't handle the swings. Like if I went and put $5 million in Bitcoin and it dropped to $2.5 million, I'll be up at night crying. It would be all I can think about. Like the stock loss that I've gone through, where I lost $1 million in the last few weeks. Like that's all I can think about. It's like eating me away inside, knowing that like to make that money back without taking immense amounts of risk, I have to go work hundreds of hours to make that back. And so it's like, I feel like when I have big losses, and like my goal is capital preservation at this point, above all else, I need to make sure that I never put my financial independence at risk. And so for me, it's about, Bitcoin's just too risky in that sense for me. And I think it's come up a long way. I like it a lot less than I liked it at 30,000 a token, at 20,000 a token. I like it less now, but it's getting wider, I guess, more wide user adoption. And there are some really great things for the Bitcoin use case now and its store of value. I still think it's a digital gold. It has a lot of potential. For me, it will never be a large percentage of my net worth. I don't want to say never. If the government's backed it and accepted it as a currency and it became stabilized in the way that gold is stabilized, then I could see myself reallocating. But as it stands right now, in the environment that we're in right now, I think Bitcoin is a big risk asset, meaning there's a lot of risk associated with it. And putting all your money into it is not prudent. I think a small amount is okay. Maybe even trim. As we have those crazy rallies that we're having, it might be okay to trim some of that position and wait for the next crypto winter. Because a 4-year Bitcoin cycle, there's always a time where Bitcoin falls at least 60% from its all-time highs, usually 70% from its all-time highs. So that's just the cycle for Bitcoin right now. And it's also heavily manipulated. And there are no rules in the manipulation of it. Like in the stock market, there are rules about what the whales can do. They can't just, as an example, like you can't price fix. In Bitcoin, you can. You actually can do whatever you want. The whales who control most of the supply can literally pump it and dump it on you. They can control price however they want. There's no rules. And so it's the Wild West. And a lot of these crypto tokens are the Wild West. And so just be careful is my recommendation. My wisdom, sharing with you guys, having been up and down and gone through a lot, is just, it's a good asset class. I'm not anti-Bitcoin by any means. I think it is potentially the future. I am a holder of some Bitcoins, but it's not, I wouldn't go all in. Hong Kong Fui says, do you think home prices will increase in Canada when interest rates go down? 100% I think that home prices are going to rally when interest rates come down in Canada. We are such a debt-driven economy. We need rates to fall. It will make our economy super strong again. Joseph says, hey, throughout your journey, have you found to be the better ROI of the two, flipping versus rentals? Which would you recommend mostly? So I flip. My focus has been flipping rental properties. I don't like to do the flip where you have to hold the building and it doesn't cash flow. I buy rental properties with the intention to add value to them. And if I have to hold the property, my intention is to hold it. That's why I buy property, is to hold it forever. But what ends up happening is I fix the property up the way I want it. I increase the cash flow, and then the market values it at a price that is higher than I think it's worth. And so then I'm forced to sell the property, because every time I buy a property that I really like, including this 24 unit, probably, I don't know, every property I've ever owned, once I make it the way that I want it, the market wants to pay me more than I think it's worth. And I can go buy another asset over here that's cheaper. And so it's like, it's been really hard for me when I buy a duplex for 200 grand and I fix it up and it's worth 300, and I can go buy another duplex over here for 200. It's really hard for me to want to keep this one at 300 and not buy this one at 200. So I just sell it and buy another one at 200 and I do it again, and the wealth grows. But in a bear market like this, where the market, I think in some cases, is pricing these assets at less than they're worth in the open market, I don't want to sell as much right now. So that's been what's on my mind lately, is like just the challenge of where things are right now. And so I would say the short answer is flipping is dangerous. Like if you're not flipping income property, it's very dangerous. You can lose a lot of money. I know a lot of people in flipping who lose their shirts. I don't know many people in the rental game who've lost their shirts over a 5-year period. Because you buy a property, all the expenses are covered by the tenant, and then you make a profit. Now, there are bad situations where tenants destroy things, whatever, but over like a long period of time, you win on a rental property portfolio. So if you have 100 units and a couple don't pay, the other 90 will cover the couple that don't pay. So in scale, rentals work. You buy a one-off, it might be a horror story, whatever. Like one-off properties, 1 in 100 or whatever might lose you money, but over a long period of time, you will win with rental properties. Whereas with flips, in a down market, I know people lose money all the time, and it can get really dangerous really fast when you apply leverage to a bad flip or to a series of bad flips. So just be careful, guys out there. I'm lucky that in the flipping business, I guess, I have really competitive pricing on material, and specifically my crew of contractors that work for me. I have dedicated staff that will work at 20 bucks an hour. Most guys are paying 50 bucks an hour to their trades, and so they don't have a cost advantage. So having a cost advantage is important, and developing that cost advantage in each market that you flip and operate your rentals in is important. Management also needs to be, like, you can't go just pay top dollar. Real estate only works well if you can find affordable management and affordable trades. Like, you have to be watching the expenses like a hawk, or you lose money. It's really easy to run these properties at break even if you bring in the wrong manager. So that's my advice on that, is if you're gonna flip rentals. Flipping generates more income quicker, but why not just flip but refinance? So buy a property that's meant to be a flip, go rent them out, get great cash flow, refinance it and buy another one. And like, you're flipping it to the bank effectively, where the bank comes in with a bigger mortgage that gives you the cash out to go buy another property. So the cash out refinance, or the BRRRR, is one of my favorite methods, I guess. So I kind of came into flipping through that, I guess, improvement of multifamily properties. Tenzin, I'm doing well. Thank you for, well, I've had better days, but I'm doing better today. Brad says, how would you deploy $50,000? Personal residence is paid off and one rental property barely cash flowing. Again, like, hard to really give advice without more context, but the fact that you say you paid off a property is already a red flag for me. I don't believe in paid off properties. I think you should go to line of credit on that property. And if you can't find an opportunity to reinvest the line of credit on that property you own outright, reinvest those funds and make a profit on higher than the cost of the debt that you're going to borrow against, a significant profit, hopefully, then you need to go take some education, some time to educate yourself on how to invest, because there are so many investment opportunities where you can make double-digit returns right now, and you know, you can borrow at like still 6-7%, right? So there's still a spread there, and that spread's going to widen substantially as rates fall. So that's my thought on that. Is you know, obviously leverage is a good thing to an extent, but if you have 50 grand, maybe you go buy another rental property. That could be a good idea to put the capital to work. The S&P and the NASDAQ are near all-time record highs. They may go higher, but there's a lot of downside risk. So if you're going to go deploy that 50 grand in the stock market into an ETF, please buy it into a hedged option. There are some ETFs that will hedge against downside risk. You get less upside, you get less downside. And I think in this market, just with all the risk catalysts that exist right now, when the market goes, it's going to go like 10%. Like, you're going to see a 10% correction like that. Because when you rise this quickly, the fall is so quick. So there's a lot of, if we had been like where we are now, a year from now, I would say there's more strength and resistance behind the price. Because we've moved so fast, so quickly with all these risk assets on, there's a lot of risk to a pullback. And I think we're way overdue. We're way overdue for even a bull market pullback. A bull market pullback is like, it runs up 50%, it goes down 10%, and then it keeps going up again. That is like gonna happen this year. I don't know when, but it will happen. It should happen. Now we're in an election year, and the market is rigged, and 8 out of 10 election years are bull years. They intentionally stimulate the market. So don't try to tell me it's not fixed. It is fixed. And there probably will be a bull year this year of all years. They will spend to keep things propped up. But the crash is coming, probably after the election. But we could still have a correction between now and the election. It's a high probability, though we may still rally into the election. So remains to be seen. Watch your old video with Gabe Bolt's video today from 4 years ago. Really blew up and hit 500,000 subscribers. People really inspired him. People like you really inspired him. Thanks, appreciate that. Yeah, you know what's cool about Gabe? He came all the way to Canada to see me, which is super cool. At a time where I was still really frugal, we made some really funny frugal jokes. I like opened a can of beans, like pretending I was like, it's a good video actually. I will say one thing about Gabe. He is a really good editor and a good cinematographer. And he's a decent looking guy too. So like those all, I don't want to say like pretty privilege, but like pretty privilege really does help. Being a good looking person is like huge in success in life and in business. He's also really hardworking too. And so he deserves everything, all the success that he has, and I'm really happy for him. Gabe's a friend. I should check in with Gabe and see what he's up to. We had a little challenge to 10,000 subscribers, I think, way back in the day. He stuck with it in a way that I haven't. Now my real estate business has just blown up from now to then. I've made like millions and millions and millions more in real estate. So I don't regret, like financially, I'm better off than if I had spent my time on YouTube, probably. But no, I mean, what could have been, what could have been. He is a great filmmaker and editor. His content is good and catchy. I could learn and take a note out of his book. He does really good quality videos. Next comment was thinking about moving to Florida in 3-4 months. What city would you suggest? Do you Airbnb during all the months you are not there? What would a house like the one you are in cost? So depends on where you go. So the more south, as a general rule of thumb, Florida's like 5 different states in one. Like the Panhandle's totally different than Central Florida. It's totally different than West versus East Coast. And then in South, like Miami's its own beast and Naples its own beast. So in general, the more south you go, the more expensive it is to live in Florida. But the nicer it is to live in Florida. So the more north you go, the cheaper it is. You have like Jacksonville and Panhandle, like north of Tampa. Super, super cheap for a house. You can get a house for like $150,000. Super cheap. Central Florida, also super cheap. Gets expensive towards Orlando and gets cheap again. But I actually took, before I started investing in Florida, I took a road trip all the way around Florida, all the way around, and then in the center. I went to almost every city in Florida because I really wanted to get to know the state. I was from Canada, so I wanted to feel the culture in the different areas. Like the villages in Central Florida near the springs there is beautiful, actually. There are pockets that I love in Florida. For me, it came down to fit with my overall long-term plan. And I like the East Coast more because it's proximity to the Bahamas. So I think that my long-term triangle strategy of potentially, doing business in Florida, doing business in Canada, and living in the Bahamas in a tax-free zone really works because the East Coast is 60 miles. So I could fly back and forth, I could boat back and forth from Grand Bahama Island. And that was a strategy piece. On top of that, I really liked the prospects in central East Coast, like East Coast area. I really liked how like Port St. Lucie was growing like crazy. We're here and this is Jensen Beach. This place today would be about 700 to 750,000 in value, USD. This place would cost. This is a really big, sprawling 4-bedroom, 3 full bath. Backs on a little lake, has a pool and a hot tub, in a really nice HOA community on the end of a cul-de-sac. Most of the houses in here are $700,000 to $900,000, so it's on a lower entry level for this neighborhood. The numbers make good sense on it, so we got it mostly though because of seller financing. So we have a really good seller finance note on here where I think our mortgage is like $1,300 something a month, interest only payments till 2026. So that's what really was the appeal of this deal. It was under market, but it was only under market like 10%. It didn't need a lot of work. So, I mean, we can make money every month on it. The thought was like, have as a rental property, make some great money. Market rent is like $4,500 a month probably. And if our expenses are a couple grand a month, then there's a good spread there. Speaking of, hit me up, shameless plug. You can 1 month rental. So if you want to rent this for the month of April, hit me up. 55 bucks. We can do. You can come stay here for a month if you want. It's fully furnished. We got TVs in all the rooms. 75-inch TV. It's got a beautiful billiards table or pool table. It's got a hot tub, a pool. Even EV car charger for your Tesla in the garage. So it's a cool property. It's 9 minutes to the ocean or to the inlet where it's a beautiful little beach. So I highly recommend this place. We love it. I'm here showcasing you how great it is. Got a big covered lanai here, which is like 50 feet long. It's got a guest suite with a separate entrance and a separate entrance for the guest suite bathroom. So it's got its own like apartment, basically 2 master suites or the main master and then a guest house kind of thing. And a beautiful pool. We got trees back there, coconut trees. We got loquat trees, little loquat fruits in the front. I think we even have a banana tree. It's pretty cool. Pretty cool spot. I really am a big fan of it. So if anyone's coming down to Florida and likes Jensen Beach area, it's just north of West Palm Beach. Beautiful area, beautiful beaches. This is the spot. Have you doing anything with your subscribers? I do need to do more with the IG. I think the IG for now has been more like a way for people to say thank you for the 10 posts that I make a day. I should probably take some of my posts and just post them just for my IG. Wonder if I can make a stories. I should look into that. There's probably a way to make a private stories just for my followers and subscribers. I'm trying to generate like, so my Meta, I earned the verified blue check mark on my Facebook Meta. I didn't pay for that. But with Instagram, they refused. The same company. I applied both times. They're like, no, you can't get verified blue on IG. You can get it on Meta, and this happened like 2 years ago, 2.5 years ago. I went on ABC Studios' Tamron Hall show, and I blew up in the UK. They ran some articles on how frugal I was, and guy retired at 24 or whatever, and they verified me on Meta. So someone had seen those interviews and stuff and gave me the blue check mark. They wouldn't give it to me on Instagram, so I paid $22 a month. You know that? $22.99 a month with taxes for my Instagram blue check mark. So it's nice that people are actually paying for that, and it gives me priority, and it removed the shadow ban too when I did that. I was on a shadow ban on Instagram, and it removed the shadow ban when I paid for the monthly subscription. So I was on a shadow ban for a long time because of viewpoints that I had around that bug that we had, or the world got shut down, and around some of my beliefs on that exist. So I've been trying to filter some of what I say to an extent, because it turns out you can't have an opinion that doesn't align with theirs in this 1984 version of our matrix reality. Sometimes I wish I was in a new simulation. It's like I'll watch like stocks just go like every day, like rallying to the moon. I'll be like, man, I need a new simulation. Like this it's bugging out. We could be all flesh bags in a simulation. Who knows? Who knows? With God watching and giving us the free will to make our stupid decisions sometimes, and also amazing decisions sometimes. I've seen humans do amazing things in my life. It just so happens that I've been experiencing a lot of the bottom half of society lately, and I'm acutely reminded of how shitty people are too, and how selfishly interested people are, especially people who are hurting. Like when someone's going through some rough shit, I don't think I've ever been screwed over by someone that wasn't going through something rough. So take it what you will, but I've never been robbed by or stolen from or cheated by someone that wasn't suffering in some major way in their life. And so I think, as much as I want to hate humanity for being a selfish race that's going to eventually extinct itself, I do believe, or at least I get about, like if I do something wrong, ethically or morally, I feel bad about it. And I hope other people do too. I hope that like we're naturally wired in a way that like screwing people over doesn't feel good. I don't know why there's so much of it going on lately where people are okay stealing from each other and wronging each other. Maybe the incentives are all wrong in our current capitalist system. I know the current system's serving me pretty well, so I don't want to tear down the walls of our current system because I found a way to work within the game and win. So shitty as it is, the divide between the rich and the poor, philosophically, I got to do what's best for my kids, my family. My duty is to my wife and to my 3 kids and to my close family, my parents, first and foremost, above all else. And so anyway, do the best I can within the system. I don't know why I went down that rabbit hole, but just wanted to say thanks again for going live. Crazy how much free info that you give away each week. Thanks, Johnny Bahama. This is what I need to hear, is like the support, because it feels like my viewership is dwindling. I go live every week, and friends of mine and peers like Graham Stephan and Meet Kevin. I was hanging out with Graham in my living room, and he's got millions and millions of subscribers, and he's crushing it. And like same with Kevin, personal friends of mine, and I've watched their channels blow up, and mine just hasn't. I don't have the right personality, maybe I talk too fast, maybe I don't market myself well. I definitely don't enjoy editing videos, and they are very picky people who are good at editing their videos and making them pop. That's not something I'm good at. I'm good at long form blah blah speech. I would actually be a really great, friends of mine have said this to me recently, they're like, you'd be a great educator. Like if you did this full time, you did a live stream every day and you walked people through, like, I'm really intelligent, I pick things up quickly, and I'm good at putting things together in a way that like I see insights most people don't. And so that's helpful. I think if I could share that wisdom with others in a way that was profitable, like if I can make a business out of it somehow, I'm good at that. I'm not good at the clickbaity videos. I don't like editing. I don't like the thumbnails. So I forget where I was going with that, but I'm really happy for them. Friends of mine, like those guys have all crushed it, and I have lots of friends who have millions of subscribers and are doing really well and have gone viral. It just hasn't been that way for me. I don't have luck. I will say this, I'm not a lucky person, I don't think. Like I invest in a stock and it inverses me. What I have is grit. And when you have grit, like I've had houses catch on fire and houses flood. And I had that shitty luck where squatters move in and destroy my property. That's the kind of luck that I have. That's the cards I'm dealt. I was born poor to a drug dealer stepdad. I lived in foster. I had shit circumstances for my setup. But I still persevered. That's who I am. I'm the guy who doesn't get lucky. My videos don't go viral. But I fucking outwork everyone. And I will grind in the things that I'm passionate about. I will grind to the ends of the earth. And so that's my superpower, is I can endure pain. And so I'm thankful for the things that I have. Gratitude. Can't focus on what you don't have. Focus on what you do have. And remember that God gives us all gifts. And I think it helps to remember that there's a plan and that things happen for a reason. And we're given free will to make the right decisions and to do the things we got to do. And some people's chapter 1 is someone else's chapter 20. And, some people have amazing, like, they're broke until they're 35. And then the right idea clicks and the right things come together and they become a billionaire. Like Colonel Sanders didn't start KFC till he was in his 60s. There's been lots of stories where I'm 31 years old. So still lots of time. And I've done so much. I mean, as much as I beat out myself, looking at and comparing to peers of mine who are massively, like, I have friends who have $100 million companies. And it's like, or acquaintances, I guess I'll say. They're not super close friends. But I do have super close friends who have $30, $40 million companies. And it's like, I actually owned a company that's probably worth that now. I just own a third of a company that is worth that now. It's crazy, like how decisions that you make impact your life. And I look at those peers who are doing better than me financially. I mean, what is a good life, right? Like, they don't have kids, they're not married. So I spend a lot of time with my 3 kids. Maybe one of my daughters will be a billionaire standing on my shoulders. And so maybe it's not even about me. Maybe it's about one of my daughters who will take the reins of what I've built and 100x it with the start that I've given them, with the foundation. They'll build a massive tower. Maybe it's not about me. Maybe I'm not the main character of the Rosehart story. Maybe I'm the foundation. And so I think about those things sometimes, and it helps. I'm also wild. I've had a lot of success. A lot of people look at me and they're like, wow, Mike, like, you've acquired hundreds of units. You've done so much. Like, some people through their lifetime don't do 150 properties, right? So I have done a lot, but I could do a lot more, and I could be a lot more. If I had given myself entirely to to financial pursuits from when I was 17 to when I'm, say, 40. There's no reason I couldn't be a billionaire. I have the capability, but I have vices. As an example, I love to watch movies, to spend time with my family. Some of the people I know that are hyper successful, they don't want to spend time with their kids. They're out there working, and they have different value sets than I do. I also value my family, my parents. I take care of my mom and try to take care of my dad as well, and try to take care of, my brother where I can, and bring in my cousin as an example of my business. Those might not be. Sometimes I make decisions based on family and on emotion as well, and it's not always a bad thing. There's extreme loyalty between my stepbrother and I, and we're going to build something pretty awesome together. So I'm excited about what we've been able to do so far and what we're able to do into the future. I'm gonna wrap up these last couple questions, put my kids to bed. Bitcoin went down 8K. Just remember that, what was it? 4 years ago, 2 weeks ago on the day, 4 years ago, Bitcoin dropped 50% in one day. It could drop 30% in one day, and that wouldn't surprise me. So to answer your question, the volatility associated with Bitcoin is immense. There is immense risk with that asset. It is not stable at all. A few people hold all the tokens, or most of the token supply. And so it's the amount of trading volume that exists relative to what these whales own. They can control the supply entirely. And just remember that, things can change in a second, and a Bitcoin whale could dump their supply, force the price right down to 20,000 a token. If the buyer demand dries up, that can happen. I am Root says, hey Mike, new follower here. Do you think your mindset changed once you reach financial independence? Yes, entirely. I had a huge paradigm shift in 2016 when I hit financial independence. And that was 8 years ago. And it's been a big change, even just in the last 4 years. I've noticed a huge shift in my mindset. When I watch my videos from 4 or 5 years ago, I was a person I am now. I was so frugal in ways that I'm not now. I'm value focused now, but my time has gotten more valuable, and that's been the biggest. I used to sacrifice so much time in the pursuit of saving money, and not I can just go to a coaching call, make $1,000, or go do a deal and make $50,000 by leaning in 2 days of my time to make 50 grand. So it's being frugal isn't worth it from a return on time perspective, and that was a big shift for me. Is that changed the core of who I am, which was this ultra frugal guy who came from nothing, who was afraid to get rid of his resources, scarcity, hanging on to my resources. Now I'm more willing to freely, sort of invest those resources, I guess, and invest in people. It doesn't always pay off, but when it does, when you train someone, you invest in them heavily. Like my brother, I'm investing a lot of my time and money into him, and that's going to be a huge payoff, I think. People have shorter attention spans. So true. I need to get more poppy, more, viral, I guess. Thanks for your content. Really appreciate it. Thanks, David. Appreciate it. Your IG really been great. Keep in mind that Kevin and Graham spend thousands and thousands of dollars on content every month. True. I could start treating it like a business. They have a good, they spend thousands. They didn't before. I used to watch Graham talk with him as he edited videos for 14 hours straight. One video. He would be up all night editing the video. And he would just go and reshoot the video again. He was that, I want to say anal, but perfectionist. And that's what it takes. That extra 1% he had, that when it came to editing videos, I didn't enjoy that in the same way. It feels like work. And I don't want to put myself through work. There are so many things I could do with my time to generate money that I enjoy. Why would I do things with my time that I don't enjoy? And editing content, I don't enjoy. Now that they make $1 million a month on their content, they have to invest a couple $100,000 a month into their content. So it's a business. So if 100 of you guys all subscribe to my Instagram and all paid $10, it's $1,000 a month, I will reinvest that $1,000 a month into a marketing manager, some intern I could bring on, pay them $1,000, and they would help me with my content. I'll make that commitment to you. Anything I make from YouTube, which is nothing. I think I made $20 last month from YouTube. Anything I make from YouTube, I put back into my tech, into my subscriptions, all back to you guys. It's a non-profit. This is a non-profit channel. And if this channel ever does blow up, you guys share my videos and we grow and whatever, I will make a promise that I will reinvest what we make back into the channel to help it grow, back into making better content for free for you guys. So yeah. Great stream. Thanks, Chung. David says, how can I translate from being a full-time landscaper to a full-time real estate investor? Transition, I think, is what you meant. Okay, there's the correction you followed with the comment after that. So David, to answer your question, a lot of the same skills you need to run a business are needed to run a real estate business. But I guess the question is, like, do you want to be a property manager? Because that would be a place to start. You're basically a glorified property manager as a real estate investor. So maybe try some property management out. See if you like it. Do you like dealing with tenants and placing tenants? And so maybe you could make a landscaping business that also has a property management aspect to it, because you're already there servicing people's lawns, whatever. Maybe you add on a service like, hey, I can do maintenance as well. Or I can coordinate, I can pick up rents while I'm there. And you could add on and bolt onto your landscaping business to make it more of a, if you're passionate about real estate, make it more passionate. Yeah. Take it easy. Take care. Thank you for the comments. Really appreciate everyone who tuned into the stream tonight. As always, the secret to unlocking wealth for you is 3 levers and control your financial future. Spend less, earn more, and maximize returns in the difference. Those are the 3 levers. That's it. That's how you build wealth. That's the equation, the secret formula. People are like, how do you do it? It's like, earn more money, don't spend all of what you earn, and then invest all of that. So that's the secret. It's like everyone I know, well, it's by definition, everyone who is rich had to go through periods where they earned a lot more than they spent, or in other words, they spent a lot less than they earned. If you spend all of what you earn, you will be poor. Fact. So you need to find ways to earn more money and spend less. That's the secret. And then once you build that gap up and you have significant assets, then you invest those, they snowball, they create passive income, makes it even easier to earn more than you spend. And it gets to a point where, like, now I have a hard time, I would be really hard pressed to spend what I earn in passive income. I don't even think I could, even if I tried. Like, I have to, like, get I don't know, I'd have to, like, get some fancy cars or something. I don't even know. It's just, it's just not something I'm passionate about right now, but maybe in the future I'll get a Tesla or something, and even that would be kind of frugal, really. All right, everyone, I'm wrapping up the stream. Thanks, everyone, for tuning in. We'll see you next week, and we'll see you on Instagram at Mike Rosehart and on Facebook at Mike Rosehart. Look for the blue check mark, and yeah, follow along.